You are about to master the specific logic that separates professional entries from the rest of the market. The key to consistent growth is seeing market structure logic instantly on every chart you open. Let me prove exactly how this works right now. Before we master the manual steps, you'll be excited to know this logic can be fully automated. Stick with me for a few seconds and I'll show you the professional tool that handles this process for you. The power of this rule comes from its perfect alignment with market structure logic. Here is the visual proof of that logic running in real time, setting the foundation for a manual lesson. But wait, before we break it down manually, you need to know this logic is instantly automated. The Structure Companion tool is the ultimate fix, identifying all the highs, lows, and imbalances across all time frames. You are getting the tool, the short training course, and the exclusive Discord support to make sure you use it perfectly. You're gaining a guaranteed system for structure analysis, not just software. This is your next step to trading with confidence and precision. Now listen close. That instant proof you just saw, the Structure Companion tool, is the reason. It takes everything you're about to learn manually and does it instantly across all time frames. If you know you need this guaranteed instant fix, the link is right below this video. Otherwise, let's look at how it works. This lesson, you're going to learn exactly how to map this structure, understanding that high and low and breaker structure in the market, and the way that we use this across multiple time frames. Then later, I'm going to show you how you can automate this with a simple click of a button. So we're on the US dollar Swiss franc, and I'm going to go through from this area of price, just a short area of price. Let me just grab my drawing tool. This area of price here, we'll go through this, how we look at mapping up the area of market structure. It's very simple to do once you understand it. You'll be able to go away with this logic, apply it into your own trading, and start using it from today. So let's look at the actual candles first. It's important to understand the way we use this structure is understanding your candles. Now, the first thing we're going to do is we're going to map out a current low in the market. This is easy for you to understand. This is our lowest point in the market. So we're going to map this out for a level to the right. Let's bring this right across. So you can see where we have a break of structure. And I'm going to label this as a BOS in the market. So this is our BOS, our break to downside. Now, a break of structure is only going to be valid once we see a candlestick closing through that level. So let me just actually make this line thicker as well. So when we see this candle here, and I'll put an arrow above that candle so everything is simple for you to understand. When this body of this candle closes through this line, this is our valid break of structure. When we see this wick through only on that candle before this, it is not a valid break of structure yet. You must see a valid close through. Now, this is going to be at the previous time before we see this breakout. This is going to be classed as our current weak low in the market. Now, don't worry, I will go through exactly what that means as we progress through this year of price. And when we do see this breakout, the way we look for a valid high and a valid lows, we have two simple ways to do this. Now, on this move to downside, we'll look at this first. When we're looking to mark out a valid high in the market, what we're going to look for is a previous area where we see price before the breakout. We want to see a close above a previous candle. So for this candle here, I'll mark it out, closes above, and I'll mark off the high of the candle. It must close above the previous candle's high. We see a body candle closing above that high. That is our formation for a valid high in the market. Now, from this area, we're going to mark out the highest point before we see the breakout. This becomes my valid high in the market, and we're going to class this as is a strong high. So I'll write this out as a strong high in the market. Also put this to the right. So that's our strong high in the market. We see the break to downside. Now we're going to use the same process when you're looking to mark out your low, which again is going to be that weak low. Like I said, this was previously a weak low before it became a breaker structure. So for this, we're going to look for a close up again. Now this candle is the candle that closes above this previous candle's high. So we're going to identify this candle closes through that level, that previous high. As soon as it does that, we have a valid low in the market, and we can mark off this is a valid low, and I'll mark it off what it should be. It's going to be a weak low in the market. So we class this as a weak low. This is our strong high. This now becomes from this high in the market to this current low, this becomes what we class as our trading range. Now we're looking for continuation for price to run a week low. So this is now going to show you that we've got our previous breaker structure mapped. We've created our current strong high in the market, and we've now got a valid week low. That is how we map out your structure using this concept. If we go forward with price, we can now identify we've got this week low and this strong high. Price is currently trapped still between those two areas, and we're waiting to see where the market's going to go next. So we continue forward. Let's just actually shrink this down and we'll pull this across. So we can identify that this becomes a break of structure. So now we can change this level to a BOS instead of a week low, because it becomes a break of structure. So now we have a new break of structure. As this is a bearish movement in the market, we're going to do the same process as before. So we're going to look for that breakout. Must be a bearish candle closing through. Remember, for a valid breakout, we look back for the last time we see it close up. This candle here, and I will just mark off the high of the previous candle. This is a close above that previous candle's high. That creates my valid high in the market. So what I can actually do now, I can grab this level and we map out this high as our valid high in the market. Let me just do that again so you can see. So this becomes my valid high in the market. So it's still a strong high because we see the market breaking to the downside. And we do the same thing again like before. We're going to look for that close up because we're in a bearish market, and I will show you in a moment what a bullish market will actually look like and how you map that out. So don't worry if you're not sure. We look for the close up again, and I'll mark it out again so this is crystal clear. We have a break to the upside, close up. This creates your valid low. Now again, this is going to be your week low in the market. You're going to see here what we class as a change of character in a moment. But let's mark this out as a week low. And we'll map this out to the right. So we now have our current strong high to our week low. This now becomes, and let me just map it out again. This is our high to our low, our trading range. Now price comes back up. We sweep that high only. We don't break out at that point. Remember, what are we looking for? We're looking for a breakout with a solid close through. Now that does happen right there. And what I can actually do now, I can change this to a change of character. Okay, and the reason this is a change of character is because the way the market pushes through from a bearish to a new bullish market. And I'll just change this to a dashed line. So now we can see that we just shrink this out. We can identify we had a previous trading range high to low here. We had a new breaker structure, and then that tightened up that area of a range from this high to this low. See how we didn't mark off from this high as the range? We actually used this high, and this is how this strategy works. This concept is not the simple way you've ever looked at using market structure. This is a completely different concept. So if you're not sure, go back and watch this video again and again. Look, it's here for you to watch over and over again. And if you're enjoying this type of content, do leave me a comment below and let me know this is helping you to understand your market structure. This is all about making sure you know how to use and apply this market structure. So when we do see this change of character, what we're going to look for now is a new process. And we're going to look for a close down in the market instead of a close up. Now let me show you exactly how this works. So what we're looking for, we're looking from this candle being the valid break of structure because it closes through the level. We look back for a candle that closes down. Does this one close below this one? Let me mark it out so you can see. Does it close below? No, it doesn't. So when we see this, this is not a valid close down. Next one. Did this one close? No. Did this one? No. Did this one? Now, you may be thinking, well, this candle's closed down, but that's not how we do it. We must use the candle straight after. So this candle here must be the candle that closes down. It didn't happen, so we don't use it. If this candle closed down below this candle's low, yeah, that would have been perfectly fine. That would have been valid. This didn't happen. So we look for the next time. Okay, so the next time is this one. Is this one closed down? Yes. Hopefully the light bulb moments start going off. If it is, drop down light bulb in that comment so I know that it is. Now we can mark it off. That's our valid low in the market. Now that's only drawn once we see this candle closing through. And what this becomes here, and I mark it across, we actually get a sweep of that low. We don't break it, do we? This is now what we class as a strong low. Okay, you saw the strong high before. Now this is our strong low in the market. So we have a break of structure. We've come back. We've swept through this low. Now what's actually happening here is an area of imbalance here. Price is pushing into, and then we continue to the upside. So what about when we see this valid low, the breakout? How do we find that valid high now this time? Well, the valid high is the same process, and it's going to be this candle here, and I'll show you why. As soon as we see this candle here closing down, I'll show you the actual place, mark it off. This candle closes below this previous candle's low. It's a valid high to mark. Okay, let me just move this for a moment. I'll mark out the highest point. This becomes my high in the market. So what I'll do as well, at this point in this area, this becomes now your week high in the market. And put that to the right, it is. So we now have a new trading range from this low to this high. That's as soon as you see this candle closing down. That's your new bullish range of the market. We had a change of character, which means we went from a bearish to a bullish bias. Now, do you also see how we actually change the way we map up that area by using that close up in a bearish market and the close down in a bullish market? So we see this sweep here to the downside, fools the market to push up, okay, to run this high. Now, this high basically becomes a new break of structure. So hopefully you're following along better now. Mark this out as this center point again. So we have a new break of structure here. What do we do once we see a break of structure? We're looking for that close down again. So as soon as this candle closes through, there's our close down. I'll just show you again. Okay, this level. We close through that level. So now this low, which is our current strong low, becomes here. Again, look what happens. Now, this is not a coincidence in the market. The market comes back and it sweeps and it fails to close this level. This is happening because we've got this level already pre-marked on the chart. Now, if you're using this as your low, some people will do, they'll use this as our low with the breakout because the lowest point before the breakout. Price never comes to that area. There we see a nice sweep and we know the market's going to want to run to the upside. And just like we saw before, to find that valid high, there's our close down. Map it out by this low. Okay, so we close down, retest that level. You'll see this very often as well. Continuation to downside. This forms our current high in the market. So again, we'll map this out as what it should be. This now is our week high. Put this over to the, to the right. So now we have our strong low and we have our weak high. So now we have our trading range from this low to this high. So we went from this bearish range to this bullish range to continuation of a bullish range. Market comes back, sweeps that low. And if we continue going forward with price, we can now see that we're still within this current trading range. Now, until we actually close through the strong low, or we run the weak high, we stay inside this current range. And that is it. That is all you need to understand when it comes to using the concept of this structure. But what about mapping up all time frames across all different pairs? This is just a daily time frame. How about mapping up across the monthly, the weekly, the daily, the 4-hour, the 30-minute, the 15-minute, 5-minute, all the way down to 1 minute? This takes a lot of time. But that's where the automation of the structure companion tool comes in. So let me now show you how the structure companion tool is going to make this so much quicker for you. It takes away the stress and it gives you the automation for you mapping this up. So I'm going to now, and I'll turn on the tool. Turn the tool on and lines have appeared and we have this stats table here as appeared. So when I actually cover all of this and I press delete, all the previous levels, what were there, they stay there. Okay, that's the automation of this tool. So if I now show you exactly how this works, I'll turn it off again. We have a blank chart, I'll turn it back on, and instantly all the levels are already marked. There's that previous break of structure, there's your change of character we went through, the next break of structure, and our current strong low and our weak high. And we also even have internal levels that will actually mark on this as well. Now, it's not just this daily time frame. I can go to the monthly time frame. Let me show you. Instantly plots all the monthly levels. Now, it also instantly plots the areas of imbalances as well that I mentioned, and I'll show you that in a moment. So again, look, instantly plots all your areas. That is the automation of using this tool. We instantly plot it onto the chart. Now, we quickly go back to this daily time frame, and I'm going to show you exactly an area on the chart where I said we saw that reaction. So this is a previous low head to the left. It's a previous level. You can see marked by an arrow. This is where we saw a sweep in the market. If I actually go to a replay mode here, before we get there, let's go to this point. You'll see right below this strong low, the automation has already been applied for you, all the levels, and a current area of imbalance. And that's where we're going to see price pushing down to sweep that strong low. I'll show you this now. Sweep that strong low, add that imbalance to push price for the week high. And that is exactly how you can speed up the way you use your structure going forward in 2026. So that's the structure companion tool. Your complete structure mapped automatically, validated across multiple time frames in seconds. Remember, when you get access, you are securing lifetime access to the indicator, the short training course, and the exclusive Discord support. This isn't just a fix, it's a complete system for confident structure analysis. Don't waste another day manually drawing structure. The link to claim your full access is right below this video. To continue your path to mastery and build even more consistency, watch this next video on market structure within the 90-day profit trading system.